Hey guys, it's Amber, Certified Mortgage Advisor. I'm back with another mortgage market update. And just a reminder, these are the places that I can help you with home loans. If your Monday is anything like mine, then I already feel like I've run a marathon, but we have a whole week in front of us. Let's talk about what's going on with mortgage news. Just a reminder, these are not your interest rates. They are national averages from Mortgage News Daily. So let's talk about the 30-year fix is at a 6.25% today. Your 15 years closer to a 5.71, and anything government backed FHA, VA is going to be closer to just under 6% or 5.99. I always like to look at the rate index to see how this compares to previous. So you can see that over the last day, we'll look at the 30-year fix. We're down 0.04%, week 0.03%, month 0.33%. But in the last year, well, we're still sitting just a little bit higher than the lowest point that we've gotten to. Now, this drop in interest rates has sparked some life back in mortgage applications. We saw mortgage applications jump 9.2% with the rate decreases. And that's not really surprising. What you see here is the mortgage rate applications, and then the yellow line or orange line is the fixed mortgage rate. So whenever rates go down, we typically see an increase in applications. Now, the big thing this week we have is the Fed Reserve meeting. So they start meeting tomorrow, and then they'll conclude on Wednesday, where Jerome Powell will give updated remarks. I hope you've listened to me, maybe some other people that are way smarter than me, enough to know that the Fed funds rate cut is not a mortgage rate cut. So while mortgage rates don't move in lockstep with the Fed funds rate, they do move in anticipation of what's going to happen. And that's usually through a couple of different things. One is economic data, and the other is a reaction to what the Fed has to say, like this week whenever they do their press conference. Typically, economic data, things like jobs reports or the GDP, inflation signals, all of these things can give investors a heads up on what's going to happen and cause them to react in anticipation. But we also get things like the press conference that will happen on Wednesday when Jerome Powell is going to give an updated press conference. And usually that speech is going to have some clues on where they're going, which could change how mortgage bonds react in anticipation to that move. They also produce a quarterly dot plot, and it's one of the clearest signals because it's actually each Federal Reserve member's guess, their personal outlook on where they think rates are going to go. So this is the CME FedWatch tool. It's basically how traders are betting on future Fed funds rate cuts. So it really gives us the sentiment behind what's driving mortgage bonds. So today we're sitting at a current target rate of 425 to 450, and you can see here below the 96% that would be one rate cut, moving the target rate from 400 to 425. Just last week, this was actually sitting at 88%, which means that we're now more likely to see that cut. This is the October meeting. Again, one rate cut sitting at 74.8%. That's up just a little bit from last week where it said 73.9%. And then this is December, but this is looking at a 68% likelihood of two rate cuts by then. However, last week, this number was a little bit higher, so it was at 69.3%. And again, what does all of this mean? Honestly, it's the sentiment. So if we see that they're anticipating more future rate cuts, we're likely to see mortgage bonds react in anticipation, meaning mortgage rates would typically go down if they see a higher likelihood of a Fed funds rate cut. The one in December that now went down, we want to watch that one and we want to see if that prediction continues to go down. If so, we might only see one rate cut between here and the end of the year. And honestly, this is a lot of information for me to say in the end, don't time the market. If you had a $500,000 loan that you're trying to do and rates went down by 3/8 of a point, which is 0.375, and then that's only saving you about $125 a month. It took us a month to see that change recently, but sometimes it takes us a whole year to see that change, and home prices can still go up. So that means that $125 a month that you saved on rate is eaten up by the price increasing. So again, I don't think it makes sense to time the market. Obviously, I'm not going to spend your money for you. If you guys have any questions about how you want to use this to leverage home ownership for you, I'd be happy to help.